Today I will be talking to you about adjusting journal entries and the importance of it to the principles of accounting. I will go over the four main scenarios for when adjusting entries are necessary. So why do we adjust entries? Adjusted entries are used to record revenues that have been earned and incurred expenses but not recorded yet. This aligns with ensuring revenues and expenses are recorded properly under the accrual and non-cash accounting methods. The first scenario we will look into today is known as deferred revenue. This occurs when cash is received before the revenue is earned. For example, Jake is paid $1,500 on the 1st of October for work to be completed in November. Because the service has not been provided yet, the $1,500 is not recorded as revenue, however it's recorded as a liability for October. On the 1st of October, Jake will debit the cash of $1,500 and credit the unearned revenue. Once the service has been provided, Jake will adjust the entry. On the 30th of November, we now debit the unearned revenue and credit the service revenue. The second scenario is accrued revenue. This occurs when a sum of cash is received after a revenue is earned. For example, Jake provides a service on the 2nd of October for $1,500 and invoices the customer and then receives the payment on the 10th of November. We would then record the transaction as per follows, whereby at the end of October, Jake will debit the accounts receivable and credit the service revenue. At the end of November, the entry will be adjusted in which Jake will debit the cash and credit the accounts receivables as he has now received the payment. The third scenario is a deferred expense. This occurs when a sum of cash is paid before the expense is incurred. Jake decides to prepay the rental expense of equipment hire for 6 months in advance. He prepays the amount of $1,500 on the 1st of October. For this case, we will debit the prepaid rent and credit the cash. Because he has paid for the 6 months, we can then divide the $1,500 by 6, which leaves us with $250. For the next month of November, we can then record the transaction by debiting the rental expense of $250 and crediting the prepaid rent of $250. The last scenario looks into accrued expenses. This relates to situations in which cash is paid after the expense is incurred. For example, if Jake incurs an expense for the use of electricity for the month of October, which totals an amount of $200, however does not pay the bill for the expense until November. To record this, in the first transaction for the month of October, we will debit the electricity expense and credit the accounts payable. In November, when we record this transaction, we will then enter it whereby we debit the accounts payable and credit the cash. So these are the four basic scenarios to adjusting entries. Thank you.